Hi, this is Randy Finney with the Right Side of the Chart, and this is a closing market wrap for the week ending Friday, November 8th, 2019. We'll keep the coverage on the broad markets brief because there's just really not a lot to update. We'll start out with the levels I've been watching recently. If you're a member of the site, this video will be mostly a recap of the earlier analysis today and yesterday. Public YouTube viewers, I skip when there's not a lot of new developments in the market. Volatility's been low lately, very low. The VIX down at that low end of the trading range. I'll typically just do an update every other day unless there's something significant to note. So the levels we've been watching for quite a while right here is this 60-minute uptrend line. Until we break that uptrend line, we don't have any sell signals. QQQ remains in an uptrend. So it came back, it had a couple tests recently, tested there. Looked like we might get a breakdown the next day. We didn't. We gapped above, and then that gave us this support level here. That's one level I'm watching. So today we came very close once again. We started to move down there, and as I always say, there's two things. As I said in today's video, this candle, that 60-minute candle, went below, just like some of these, but and most importantly, it was not impulsive. You want to see a solid close or a big red candle if it's interperiod with a lot of volume. This was, we barely went below the trend line. The next candle, we went down, and then we hit, that was support here, resistance, and we gapped above it, so you have a gap there. Basically, that was a perfect gap backfill, and then boom, we went right back, closed right up on the trend line, and we've been hugging it all day. So nothing's changed with the posture. We've had these divergences building since back here. They continue to build. We inch higher every day. It was 0.4% gain. Almost all that came right at the end of the day when the fund stepped in. So it was a mostly flat day. I don't know if it's shorts covering for the weekend or what. Usually you don't see a lot of people want to go take a position home on a weekend. You have 2 extra days of overnight risk. So whatever reason, I just want to point that out, that nearly all of today's gains came right there in the last hour of trading. That's 1 hour period right there. But again, same old, same old. Here's the grind, walking our way up, diverging, but no sell signals yet. And then the levels I've been watching on NQ for the last few days here, I've added this trend line a couple days ago, the yellow trend line, and that coincides roughly with the 60-minute trend line on QQQ 60-minute chart we were just looking at. So we had this trend line before, broke, back tested, but then we regained it, and then I had more focus on this one recently, and you can see we've been dancing on it, and plus the 8200 level. So as I said this morning, and I believe in yesterday's market wrap for members, which I also included, other assets as well, other trade ideas and things to watch, just at gold, Treasury. We might hit on those lightly in this video, but we need to see not just the trend line go, but 8200. 8200 is a big level, and again, bears repeating, when you trade on a 60-minute time frame, or if you trade an hourly time frame or a 5-minute chart, you want to look at the candles commensurate with that time frame. And so we had that little dip below today, but we shot right back there. That skinny white part, that's the candlestick wick. You can call it a tail when it's below as well. Or I'm sorry, a shadow. Shadows are your skinny parts. So down below it's a tail, above it's a wick. And you can see we've had several wicks, but all these candle bodies close back above. So that's it. Came close, but no cigar, so we remain in a near-term uptrend. And just like the QQQ 60-minute chart and SPY, everything else out there, these divergences continue to build. We didn't make a new high yet over that previous high, so we stop them right here. And should the markets pop up on Monday, it would still just be a divergent high, unless they went up quite a bit. So that's that. Not much more to say. Just be on the lookout. We have a lot of things that I've covered recently. The VIX getting down there. Let's see. I didn't even look today earlier. Yeah, looks like we might have hit that trading. Or there it is, right around that support zone there. Remember, I've covered this. If you haven't seen my analysis in the last couple of weeks, each and every correction since this was the big drop back in the fourth quarter 2018, and other than that, you've had these 2 big corrections. One started right here mid-April, and one started right there around late July or so, and that's where the VIX spiked. So the point is, this is the the low end zone. The VIX over time will have support zones that it falls to. It never goes to zero. It's somewhat range bound. There's no definitive top or bottom, and over time the ranges have been higher or lower, but for the last couple of years it's been this level. And again, my point that I made is when you hit it, that's not a sell signal on the market or a buy signal on the VIX. Sometimes it is. This was a one and done. Right when you hit it, that day you hit that level where you spiked down into the range, that was it. The correction started. Same with this last one back here. Will that be the case next week? Only time will tell, but I can just say that back here we hit it and we stayed down testing the bottom of that support zone, or that testing the support zone for actually several months here. And just like you had that extended low volume that I talked about, where we hit the extreme lows that I look at on the 10 period moving average, when you plot it against volume on the indexes, SPY, QQQ, we had the identical thing there. We came down, persistently low volume, and eventually it did manifest in the form of correction. And because you had that persistent low VIX, meaning this is complacent, everybody was bullish for too long, you had the big correction. These other ones you just one and done, and we'll see. Again, let's just watch this. As I always say, fall down to this level. It's a lot like being overbought or oversold. Those aren't buy or sell signals. They're just, hey, heads up, you're probably going to get a trend reversal, and markets tend to not do much more from that point, but we'll watch it. So let's move on, and let's just conclude this video with, especially if you're a YouTube subscriber, and because the way right side of the chart set up, it's a freemium service, meaning there's free and premium content. Free content's general stock market analysis. And if you're still listening to my voice after all these weeks of the market just grinding higher, saying months ago that, look, if it makes a new high, which is very possible, it'll probably be a marginal new high, just like the pattern has been now for almost 2 years. Each and every high, all of these that I've talked about here, this was an all-time high back there in early January. It took up until this point here. That was an all-time high. That one was higher than the previous one. That one was higher than the previous. That one was higher than previous, and this one. All of these, what they have in common is they were all divergent highs after the first one. This was a divergent high here, divergent high, divergent high, divergent high. They all had that drop off in volume. They all had the VIX falling to that level I just showed you. And they all were marginal new highs, meaning anywhere from less than 1% to about 3% or so, wherever this one is right now. So that's it. And that's the pattern. We'll see if it repeats until we get a sell signal. You don't go shorting, because sometimes, like right here, we broke to a new high at that point, but if we continued to build on that again with about a 2% to less than 3% lift, and it took 1.2 months. It's showing me in the pop-up box there, from the point that we popped above the previous all-time high. So that's why, just looking at this pattern, again, the timing comes when you get the sell signals, and that's why I'm hyper focused on these 60-minute charts on QQQ and SPY. All right, and to wrap the video up, although I can't go over the official trade ideas, that's what members, the site are paying for. We've had almost all the official and the majority of the unofficial trade ideas, well over. Easily over 50 stocks in the last probably 3-4 weeks have been alongside trade ideas. We had Bitcoin back here. We took Bitcoin. GBTC was our proxy. We were in right here at the lows on the breakout. Actually, we took this one in the triangle, I believe, in anticipation of the breakout, and I had it going up to right here. Well, here's the chart when the trade was posted back on, down on the bottom, October 16th. We were right here. And so what I'll do often is I'll either take a breakout, on a bullish or bearish chart pattern, in this case a bullish chart pattern, when the breakout occurs, or if I have a high enough confidence. There were many reasons cited in addition to this. We went long there, and this is where I had us going up here at about that 1183 level, but I said if the trend line came in first, we'd take it that. And what I'm getting at here, guys, is the common theme is my focus has been and remains on securities that are not have very little, if any, correlation to the broad market. So I'm just going to rifle off some of these because they're either completed or trades that we're still in that most of the meat's off the bone. So they're I'll update those. But again, you can see there's that original target. Now, I booked profits here at the downtrend line for, what was that, a 27% gain. But you can see we went to exactly that level. There it is, where that would have been the target had we hit it earlier. And I must have modified that trend line there. But you can see perfect reversals. We got in at the lows. Out a little bit before the highs, although you could have milked it up to that level. And again, why buy Bitcoin? Because it has nothing to do with the broad market. And here's the other takeaway, guys, is, to me, it's not just about the risk reward profile, the broad market being pretty poor. It's where the profit potential is. So, like this trade and many others, I'll rifle through some of these here. Let me go through, let me turn off the trend lines because some of these are still active trades or actionable trades. On October 15th, I covered 37 or 36, about 3 dozen stocks in the drug manufacturer, specialty and generic drug manufacturing sector. Now, of those 36, they were all not actionable trades at the time. In fact, most were trade setups that had yet to trigger a buy entry or trigger an objective entry. And some of those actually had at the time, and I mentioned those as offering objective entry at the time. And these are just a few of them. And there's still many that haven't triggered entries. But Teva up 33% from where it was mentioned in that video as an actionable trade back then on the 15th. COLL. This one I mentioned right here in the wedge on a breakout above. There's your breakout. It was impulsive, everything you want to see. From that point, we hit my final target yesterday for a 60 flat, overshot it. And today again, this is yesterday's high. It overshot my target, and that was a 55% hit to my final target there. 65% gain so far. You haven't made 65% in the stock market in years. And look, they all don't pan out, guys. There's some losers in there as well. I'm not highlighting. We've had some trades stopped out in the last couple months for sure. But when you take the ones that are stopped out, you're usually capping your losses in the single digits. All depends on the trade. But again, so if you take it this way, you take a shotgun approach. And again, my focus, these stocks are typically the ones I've been highlighting have nothing to do with the broad market. There's very little correlation. IRWD was another one here mentioned in that video there, and I'll turn those lines back on. There was your breakout point. From here so far we're up on that one 20%. ENDP, some of these are big runners. ENDP up 60% from where I mentioned it, and that was as an objective buy in the video. Gained 60% into the recent highs so far. AKRX up 33% from where it was entered, and that is not the chart, is it? No. AKRX right there. Turn on those trend lines. That one's already panned out because now we've broken that trend line, and actually it looks like an objective long here on a pullback to 457. I'd have to study that chart a little further, but a lot of these, they've hit these, it ran into resistance, pretty decent levels. And again, there's a lot that haven't fully played out. MNK, 90% gain from where this one was mentioned just a few weeks back, and went on to break out the trend, break above the trend line, and has run 90% to hit that 415 or come just, I always sell just shy of the targets, the actual resistance levels, and that one was a good one. OPTN up 50% so far. This was one of my favorites. I mentioned this is one of the ones I took in there in advance because we had a beautiful inverse head and shoulders pattern. Inverse head and shoulders are bottoming patterns. And again, you're not going to find this one, it's not a top component of the S&P 500, so when the tide turns the other way, it's not going to be bound by what the stock market does. It can march to its own drumbeat. So it was mentioned in here, went on to finalize that right shoulder, broke out, just hit the first target, the other day, a little reaction there, and probably has more upside to go. So that's it. Tilray we took for a 12% gain back a few weeks ago because the cannabis stocks were moving, had a good day today. They're in this sector, the specialty and generic drug stocks. Coffee, we're up, what is it, close to 20% on coffee. That's been thrown out there as a trade idea. Natural gas and crude, long and short. So that's just, and again, there's just money to be made. I can't say, look, the markets went up, but since it broke out of this previous high, we're only up a few percentage points. So it's, again, not solely about the risk return profile, which to me is very poor, meaning the next 10 to 20% most likely will be to the downside before the upside, but it's more about the gain potential. The market's just inching up on what I believe to be, and I've made the case many times before, dangerously low volume is what I call it. Dangerously low volume, dangerously high bullish sentiment, VIX down at levels where the corrections typically start. So that's it. So the point is, there's always somewhere to make money, and there are people making money if you're long right now, the last couple weeks in SPY, but there's much easier profits to be made elsewhere, and that's what I'll continue to focus on, and I'll still do these updates because that's what we do. Before I wrap it up, let me just share something. I usually keep this stuff, anything outside the broad markets, usually subscriber content, but I do want to mention and do an update for members too, and everybody. Treasury bonds, I'm watching closely. TLT guys on the site, I told you I'd be watching to see how we close it. We closed down, but and just a hair below. This is the uptrend line on the weekly chart. We're looking at a weekly chart of TLT, long-term Treasury bond ETF right here, and we closed right on, too close in proximity to both the uptrend line here and this longer-term uptrend line that I have. So I'm going to watch this carefully. Longer term, I think there's very limited. I think the risk reward on bonds is lousy as well. There's very little upside potential. When you go to near zero, that's it. We're not going to go, most likely not going to go to negative rates in the U.S. And even if we did, they only go so far into the negative. And that means bonds are going to go, there's only a limited downside in interest rates in the long-term bonds, and that means limited upside. However, that's all long-term stuff. Near-term, we're getting there. We're not oversold yet on this weekly chart. We're right to the 50 point on the RSI, and that's often where, when you fall from the overbought readings down to about the midpoint, you can see that often acts as a support when hit from above or below. And more importantly, we're at support on price support. So if we do bounce next week, that will most likely be either in concert with the stock market falling, or smart money institutions starting to move back into treasuries again. We did start to see a couple weeks ago a rally, but it got faded. We started to see money moving back into treasuries. It was only a trend for a few days, and it didn't stick, and then we're back down here. So we'll watch this one. That's what my point is. In gold too, the other big risk-off asset. Treasuries are number one. Gold would be number two, I'd say, for risk-off assets. And gold is also at a very important technical juncture. Gold is in a bull market. Nobody can argue that. The trend lately has been down. It's in more of a consolidation period, but gold bottomed back in 2015 and has been moving higher, and it's had a strong advance earlier in the year, but it got ahead of itself. It got very overbought. The train was too crowded. Everybody was on one side of the boat. Everybody was on one side of the boat, and now what happens there is you're going to stop, and a lot like the stock market now, I think. But more importantly, you had a big gap up right here, and that set up this multi-month trading range that we've been in now on gold. It shows well on the daily chart. It's a sloppy trading range. It's a 3-month-long trading range, and we're there now. You can see we're right back at the bottom of that candle. Big ugly candle this week, no doubt, but that brings us right to the bottom of this 3-month sideways trading range. And so these are the things I'm going to watch next week. If gold can hold up here, there is that chance, and it would mesh with a imminent top on the stock market based on all those other things I talked about a minute ago, with low volume, VIX down to levels, the pattern of marginal new breakouts with divergences failing, and so we'll watch gold. And if we can get above here, if gold starts to rally, market starts to correct, it'll probably go one and the same. Gold could potentially break out and start the next leg up in a bull market. That would most likely mesh with a major top in the stock market. lots and lots of work to be done here. So we're not going to have, at best next week, we'll only know if gold's going to remain in this 3-month trading range, or if it's going to break down below. And as you can see here on my chart, there's not a lot stopping gold until about 130. If it breaks that level, it's about it closed at 137.39 GLD. So those are the things I'm watching for. And again, there's a lot of individual sectors. Oh, and then finally, I'll make mention Clovis today. Posted that one as a setup today on a break above what was the level there, something '07. I remember the '07, and we took this one for a quick 22% gain. Posted that as an unofficial trade. Had it on my radar for a while here, waiting for earnings to get out of the way. They reported yesterday, and then I said over today. Break over 507 would take us up to the 620 target, and that was it. Perfect tag of that. Boom, hit 620. I think we went a few pennies over. Like I said, I booked half profits. I'm going to let the other half run for now with a stop, but that was from 507 up to 620. That was a quick 22% gain in just a couple hours. So again, why Clovis? Because it's not it's not top-heavy component of S&P 500, and there's just tremendous amount of profit potential in these nice little setups that aren't stretched at all-time high, overbought, and again pegged to the major indexes. All right, guys, we'll wrap it up here and pick this up next week. This has been Randy Finney with Right Side of the Chart. Have a great weekend.